stock market weekly chart review for the week of November 21st through November 25th. This was a shortened week because of the Thanksgiving holiday on the 24th and shortened day on the 25th. In these videos, we're looking at the S&P 500 as a proxy for the overall stock market. You can look at the S&P 500, you can look at the NASDAQ, you can look at the Dow, you can look at a combination of them all, but for the moment being, we're going to be looking at the S&P 500 as a proxy for the overall stock market, because whatever the overall stock market's doing, it's putting weight on a particular stock. Like at this time here, when the S&P 500 was nicely cruising to the upside above all three of these moving averages, it was putting in a lot of weight, pushing stocks up. And then over here around the beginning of 2022, stock market's been going down overall, so that's putting weight on stocks going down. At the moment, we see that it's been going up since about, what date is that? Roughly since around here of kind of the middle of October. Yeah, sort of around the middle of October, start going up. But overall, even though it's been going up, we see high, lower high, lower high, lower high at the moment, and we see low, lower low, lower low, lower low, lower low, lower low at the moment. So at the moment, we're still in this downtrend, and what we're going to do is right here from Yahoo Finance, put in S&P 500, and then right here under holdings, and you see these different sectors that make up the S&P 500. You got technology coming in at about 23, a little bit over 23.5%. And then we have healthcare at a little bit over 15%, financial services at 13.65%, consumer cyclical at a little over about 10.5%, a little over 10.5%. And then we're also going to take a peek at industrials that coming in at 8.68%. Now these are subject to change. That's why we're looking at them every week. Used to be, I think technology was about 27% or something like that. And there's other sectors in here that are obviously making up the S&P 500. But for time's sake, we're looking at, what is that, 5 of them, 5 of the biggest ones. Now you can do this with other ETFs too. Whatever ETF it is that you're particularly interested in trading, you can find out what its holdings are, and then you can look at the stocks or whatever the holdings of it. Look at those things, and if the bulk, if the top 3 stocks make up, let's say, like 30% of it or so, are doing, are all whatever moving sideways, then there's a high chance that your ETF is going to move sideways. So you can do this for a couple of different things. So over here I have we got the S&P 500 where we're looking at that, but we got some ETFs that are correlating with these different sectors. XLK is technology, XLV is healthcare, XLF is financials, XLY is consumer discretionary, XLI is industrials. Sometimes I like to look at these two, IWM, QQQ, UUP, and TLT. On the daily chart review, I look at those. And just, me personally, like, there's one thing of like making videos. I'm trying to make organized so it makes sense to other people. But a lot of times, me personally, I'm constantly kind of looking at what the weekly chart's doing after it's been trading a couple days, because I like that kind of bigger time frame. So we already been looking at the S&P 500. We see that we looked at those still making these lower highs, these lower lows, and at the moment going back here around, I think it was the 10th of October, it right in here, a couple weeks in there, it's testing this 200-day moving average, and then bounced up from there. Now, at the moment, last week's candle, this doji type of candle, is it's a bit of an indecision candle, and this week we got some light trading because of the holiday, because of the shortened day, just overall slight trading. So it might not be the best true indicator of what's going to happen in the market. In fact, now we're coming into Christmas, and then we're going into the new year. So it's going to be light trading. So I wouldn't doubt if on this light trading, if it gets pushed up. But once we get into the new year, and maybe like halfway in, I don't know exactly when, but sometime when we're in the new year, we'll probably see how things are shaking out a little more. And there's always things going on in the stock market, that these events that people are waiting to see what's going to happen, and then there's some movement. But overall, we're looking at this bear market of it's lasted getting close to a year now. So we're either gonna stay in this bear market, or we're gonna break out of this bear market and go into a sideways market or a bull market. At the moment, though, it's definitely in this bear market. And we see this week's candle didn't really make much progress up, and it's always good to look to the left. We see that in the past, prices kind of got stuck around here, also right in here. So it seems like in this range from about 400 to 410, prices get kind of sticky in there. And so right now, we barely got up above 400. Last week, not this last week, but the week before that, slowing down. This is a lot of times, it's kind of indecision. Maybe it can be digesting. If you're running for a long time, you have a run, you kind of slow down a little bit to catch your breath, type of thing. This can indicate a potential reversal, or it could just be getting ready to go up higher. Sometimes it's building a base. So we'll have to wait and see, what's going to happen with that. Let's look at some of these sectors that make up the S&P 500, see if we have an idea of what might happen going forward into next week or a couple weeks down the road. So the technology stocks, technology sector, looking a little bit the same, but this candle is not as it's not as big as the S&P 500s. But and same here, we have this real doji candle where it basically opened and closed exactly the same. Some indecision here. Same thing, and on this uptrend, been consistently doing lower highs and lower lows since then. Tested that 200-day moving average and trying to work its way up, getting stuck here around that 20-day moving average. And prices, same thing, seem to be stuck in this range, even though we're at this big bull candle here. Even though we're at the top percent, it barely moved up, right? Barely any higher than last week. And like I said, light volume. There's a light volume there. So maybe a little bit of sideways. Healthcare has been pretty good. Now, healthcare never even got down to test this 200-day moving average. This is the lowest it got. Probably, if we look at the date, probably around that October 10th area. Right here was the October 10th. So yeah, right in here, testing these lows. And it's just been to the upside. Now we are above all three moving averages, closer to these highs up here. I could imagine, I was waiting to see around this $35 area what's going to happen. So it definitely took out this $35 area. Let's see if it stays above that $35 area, which I think it probably can, being that it's above all three of these moving averages. Generally speaking, once it's above these moving averages, it gives it a lot of support under it to help keep it up. And this candle we have, looks like prices, look over here at the high, look over there right now. Okay, so the high is it got is 137.26, but it closed at 137.15. So it pulled back just a little bit. We can barely see a little bit of the shadow sticking up there. Overall, it's looking pretty darn bullish. Traded, I can see it traded a little bit lower. Overall, that's a pretty strong bull candle. So I wouldn't be surprised if we see more strength to the upside coming. And being that this was what, around 15% of the S&P 500, that will help push the S&P 500 up. Financials also, we have a good bullish candle, but you notice this week it opened down here. It's still in the top 50% of this candle, but it closed, it's barely higher, you know, 3 weeks later, right? 1 week, 2 weeks, 3 weeks. 3 weeks later, it's barely higher. And I think it's because this $36 area is just giving it a lot of resistance, right? If it's on the bottom of this 36, it's a resistance. If it's on the top of that 36, it is support. And right now, yeah, it's on the top, but not by much, just 11 cents. And this did give us a little hint though. See this candle opened here, closed here, but it traded way down here and selling pushed it up here. It's still almost closed a little bit below that that 50-day moving average, and we're still kind of riding that 50-day moving average. So we'll see how prices go, but if it starts really closing strongly above, like where would it get over some of the stuff? I think 37. I think we might see some resistance here. Anytime you start seeing these candles overlap, and you know when it's got this nice like right here, you notice that it's going up nicely, and gets a little stuck right in this area, kind of right in that area, and in this $37 area. Seems like that's 36 to 37. So let's see how that goes. When we're in this light volume, I think they could push it up if they're trying to. Now, consumer discretionary, we're below all three of these moving averages. Can't get above that 200-day moving average. So that's putting some pressure to the downside of the S&P 500. But how much was that? Consumer discretionary, consumer cyclical, 10%. So yeah, 10%. It's not as much as 15 or 20, of course, but so we got something. We got this one kind of going sideways. We got this one going up well. We got this one kind of going up well too, and we got this one kind of pulling things down. We got that real light volume, and look at that, just really moving sideways here, but below this 200-day moving average. So when it's below all three of these moving averages, not the likelihood, say the ease of it dropping, it'd be easier for it to drop further than the ease of it getting above here. It's kind of like if you live in if you go into an apartment building, and this is like the 8th floor, and then here's the ceiling of the 8th floor, then you're on the 9th floor. Here's a ceiling to the 9th floor, then you're on the 10th floor. Then here's a ceiling to the 10th floor, then you're on the 11th floor. Look at there's nothing below here. It's ready just to, not necessarily ready, but it's going to be easier for it to go down than for it to get through this, which is going to give it a lot of resistance. Industrials. Okay, we're on all three, on top of all three of these moving averages, and it's been a pretty strong trend to the upside. Last week we see a lot of trading down and buying pressure put that up. Now look at this week, opened up right in here, right in the area, and really pushed up pretty well. Looking to the left, we see that there's a lot of price congestion in here, but it's kind of going strong to the upside. So we got one sector below all three moving averages. One sector kind of going, it's been going down, but look at here and here, right here. We're kind of going sideways in this time frame. Traded up is here, low is here, going sideways, going up, going up, but not with a lot of strength. On the lower side, going sideways and going up. So when we're looking at S&P 500 on this line chart, we see this channel, right? Top side of this bear market channel, bottom side of the bear market channel. We see we've broken out of that bear market channel and potentially have a little W pattern right here. So because we have a significant amount of sectors, and sectors that make up a decent amount of the S&P 500 pushing to the upside, with the one that makes up the most, the technology, moving sideways just a little bit. I think what's likely to happen is we're gonna, at least in the next week to 2 weeks, I think we'll see a little more movement to the upside, but potentially with a little bit of sideways momentum. And then there's this thing called the Santa Claus rally, where can't remember all the details, but on this light volume, I think there are certain entities that somehow are in the stock market, whether it's CEOs of companies or whether it's traders. I can't quite remember, but I think if they're ending the year with stocks being at a certain price, they're getting some bonuses. So maybe it's the CEOs of certain companies or whatever, some executives. So maybe they buy back stock or do something to try to get that to go up. But generally speaking, during the holiday time, stock market tends to go up. So you got the Santa Claus rally. So that's what I'm kind of betting on. But I'm not convinced that we're out of the woods of this bear market, though. I think it's possible that it could fail, but I also think it's possible that we could be ending this bear market through kind of like a sideways grind. So we will see. Me personally, I'm kind of prepared for everything. I'm sticking to a lot of selling cash secured put options on stocks that I want to own more of, and if I own certain stocks, selling covered call options on them, and accumulating more stocks I want to buy that I wouldn't mind owning. If you're interested in learning how to do that, which is it's a pretty good trading system that doesn't require you to just be monitoring the computer all the time. So if you have kind of busy schedule and you want to be in a situation where you're constantly growing money and you're giving yourself a very hard time to lose money, which you could still lose money doing this, but it makes it more difficult when you're selling cash secured put options on stocks that you don't mind owning the rest of your life, and you do a decent job on picking those out. Then download this stuff. Go to ihavesuccess.com. Download this one. This would be a really helpful. Download the 3 stocks I sell put options on. You kind of see how thinking process is the same about what I like about those particular stocks. Though these aren't the only 3 that I sell put options on, but these are ones that I've been selling put options on for a long time that I like. And you can download these other things. Download those. Usually about 6 days a week, I'm sending you market information right to your inbox. And if this is a strategy that you think you might like, to me it's a bread and butter strategy. At the minimum, I personally think every human being that has a bank account and an internet connection and spends money at least once a year, I think in 2022, there's no reason not to be doing this. It's only BS excuses if you're not doing it. Because if you're spending money at least once a year, this is going to help you make more money. And in a few weeks, I'm not exactly sure how long it's going to be, but I'm going to be coming out with a product to help out more with this. So get on this mailing list, get your free downloads, and you'll be one of the first people to get access to that, probably with some discounted pricing. With that, you guys have a fantastic day, whatever day you're watching this, and I'll talk to you later. Aloha.